In the recently concluded interest rate meeting, the Reserve Bank of Australia decided to keep the interest rate unchanged at 4.35%.
As you'll have seen, the board decided to hold its policy rate steady again at this meeting,
marking the third time the rate has remained steady since the unexpected hike in November last year. This interest rate meeting's minutes contained unusually distinct wording compared to previous meetings, hinting at a possible significant move by the central bank. During the press conference following the meeting, the governor addressed several key issues, including the Chinese economy. She also admitted that the central bank's past predictions on Australian property prices were all incorrect. Property investors are particularly interested in the central bank's view on iron ore prices and exports, revealing crucial information about the direction of the Australian property market, especially the Perth market. Is the Perth property market fundamentally changed, or is it still in the same old boom and bust mining cycle? Hi, my name's Alex. Welcome to Oz Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Since May 2022, Australia has undergone 13 rate hikes, and economic growth has slowed. Although inflation has come down, it has not reached the central bank's desired range of 2 to 3%. In this context, the RBA has decided to keep the interest rate unchanged. The current cash rate remains at 4.35%, while the central bank has not provided clear guidance on future policy directions, merely stating that everything is possible.
so we continue to be vigilant and we can't rule anything in or out.
Many economists predict that the Reserve Bank will wait for further signs of inflation slowing down and might begin lowering interest rates in the second half of this year. Some predict rate cuts could be delayed until November, while others believe there's a possibility for earlier cuts. There are various opinions, but the common expectation is that the next move will be a rate cut. Currently, the variable interest rate for a 25-year mortgage in Australia is about 6.4%. The past 13 rate hikes have increased the monthly repayment for $500,000 loan by $1,210 and a $750,000 loan by $1,815. If rates are reduced by 0.25% later this year, the monthly repayment for $500,000 loan would decrease by $76 after the first cut and by $152 if rates are cut twice. Therefore, interest rates need to be reduced by at least 1% to relieve people's financial stress significantly.
I wouldn't like to predict housing prices, frankly. Every time we try to do that, we seem to get it wrong.
During the press conference following the interest rate meeting, the central bank governor was asked about her views on the housing market. Remarkably, she admitted that every time RBA tried to predict the housing market, they got it wrong. The previous governor made several predictions, but all were wrong. From an economic standpoint, if interest rates rise, people's borrowing capacity decreases, leading to less affordable housing prices and reduced buying interest. However, the reality was just the opposite. When Australia began raising interest rates in May 2022, the property market cooled for a period, but by November 2022, the market has reached its cyclical bottom, entering a rising phase in February 2023, alongside rising interest rates. The main reason for the price increase was Australia's decision to welcome 500,000 immigrants, hitting the housing market. The forces determining whether housing prices rise or fall are supply and demand, both influenced by numerous factors, with interest rates being just one of them. According to reports, in 2023, Australia completed 106,900 residential properties, a 9% decrease year on year. Australia's population far exceeds the pace of new housing completions. The numbers from now till 2026 in every state and territory are predicted to decline without exception. It is anticipated that next year, the supply of new homes in capital cities will fall again to 104,580 properties, followed by a 9% decrease to 95,000 properties in 2025, and then a 17% drop to 79,000 properties in 2026. This will mark the lowest number of new housing completions over a decade. Throughout 2023, aside from Perth, there has been a decline in the release of new land lots in every primary market, with Perth experiencing a revival after a decade of stagnation. In the Greater Melbourne area, which accounts for 35% of the national land market, the number of new lot releases fell by 50%, dropping to just under 9,000 lots, while Sydney saw a 35% decrease to less than 6,000 lots, and Southeast Queensland experienced a 15% reduction to 8,600 lots. Despite a 28% decline in national land lot sales to just 30,444 lots, the average price for lots in capital cities increased by 4.8%. Currently, a 400 square meter lot in Sydney is priced at $641,000. And in Melbourne, the price of a lot is about $400,000. In addition to this point, during the press conference, the central bank governor also made rare comments on the Chinese economy and the issue of iron ore exports, which are directly related to Perth property prices. Many people get confused at first glance at this title, wondering how the Chinese economy is related to Perth property prices. The connection is significant. During the press conference following the Reserve Bank of Australia's interest rate meeting, a reporter asked the governor about her views on the Chinese economy, especially with the recent plummet in iron ore prices. Iron ore is the single most valued commodity that Australia exports to China, and its price affects the entire resources industry and Australia's overall income. The governor mentioned the Chinese economy is facing difficulties, with China setting its GDP growth target at 5% for next year. The question is whether it can be achieved. The governor spoke very cautiously, merely stating that they are closely monitoring China. To summarize the situation of the Chinese economy in one sentence, it would be quite challenging. The entire Chinese real estate industry is in the worst time in 30 years. The commencement of new housing constructions is at an all-time low. China's specialty, large-scale infrastructure projects are facing the same issue. Therefore, the demand for steel, which necessitates iron ore for production, has plummeted. A significant portion of the iron ore used for steel making in China comes from Australia, especially Western Australia, thus linking Perth economy, job market, salaries, and of course, Perth property prices. Over the past 20 years, Perth property market has experienced 3 booms and 2 busts, nearly each correlating directly with the mining industry cycles. Regarding the Perth property market trend, there are 2 perspectives. Some people are bullish, while others are bearish. Let me share my views. Perth real estate market is unlike any other state or territory. It has always followed its own path. Currently, residential property price growth across Western Australia is accelerating faster than in other cities. However, Western Australia's heavy reliance on resources, particularly iron ore, is a bit concerning. A lot of people want to invest in Perth property market but hesitate due to previous mining downturns that led to long periods of stagnant housing prices after declines. The price of iron ore from the start of this year to the time of this video has dropped from $144 to $104 per ton, a decrease of 28%. If that is not a crash, I don't know what is. The collapse in prices of nickel and lithium has put thousands of jobs in the mining state at risk. So, will this time be any different? Delving into Western Australia's property market history, housing prices and the economy have always been closely linked to the mining industry. In 2019, data from the Australian Bureau of Statistics showed that the regions with the highest proportion of negative equity in housing was in Western Australia, with price declines closely related to a high dependence on mining activities. The real estate market there has experienced a turbulent decade. Is this history enough for us to predict the future? Let's look at a chart. The blue bars in this chart represent the capital expenditure by private companies in the Western Australian mining sector from 2002 to 2023, which is essentially the costs incurred to purchase fixed assets or to extend the useful life of fixed assets. Perth economic performance is generally related to the prosperity of the resource industry and the prices of mining commodities. However, the resource industry is no longer limited to iron ore, and the Western Australian economy no longer relies solely on mining expenditures and high-paying jobs. A series of similar factors caused previous peaks and declines in Perth housing prices. For example, previous housing market downturns were due to the completion of several large mining and natural gas projects, instantly eliminating 20,000 to 30,000 jobs, along with a large number of completed new homes entering the market and adjustments in lending policies. From 2014 to 2019, the median price of properties in Perth fell by nearly 17%. But the current situation is completely different from previous Perth housing market cycles. There hasn't been a massive investment in constructing new mining facilities, which means there won't be a problem of mass unemployment following project completion. The current situation in the new housing market is that there are many orders for new houses, but builders are not taking them because there aren't enough workers to guarantee timely and quality delivery. Land developers are releasing less land less frequently. When you find a house, there are several people lining up behind you, ready to pounce like hungry wolves if you hesitate. The current rise in Perth property prices is driven by a huge imbalance between housing supply and demand. On the demand side, population growth is driven by Perth's strong economy and also by Perth's livability and lifestyle. Perth always manages to attract people from other states and territories to move there during economic boom periods. This time, a combination of domestic and international migration has caused Perth population to soar, with the highest population growth rate in Australia in 2023 at 3.1%. In my view, Perth has evolved from a purely mining city to a more diversified and mature city. Of course, the mining industry will affect Perth economy, but the impact will be much smaller and more moderate than in previous times. Firstly, the defense sector's spending far exceeds that of the mining industry. Secondly, Perth is set to become a direct flight hub to Europe. Think of London, Paris, Rome, and even Istanbul and Madrid. Thirdly, there's a severe shortage of new housing construction in Perth. The actual delivery of housing is 15,000 per year, while the demand is 25,000. Even if all domestic and international migration stopped, it would take at least 3 years to reach the 4% vacancy rate seen in previous price downturn cycles. I asked 2 friends who moved to Perth and work in the local iron ore companies, one for BHP and the other for FMG. Both are veterans in the mining industry. According to them, Gina Rinehart's iron ore company is the lowest cost producer in the world. And even if iron ore prices fall to $40 per ton, there's still profit to be made. Of course, I'm not saying that Perth property prices will rise forever. My own summary of Australian housing prices is that there will be short-term fluctuations, but in the long term, prices will always rise. Perth property prices will enter an adjustment period, but it may come later than any of us expect. If you made it this far, please give me a thumbs up, subscribe, and share this video with your friends. Turn on the notification bell to watch new weekly videos. Have a good one. Bye.